Dornbush download 158. Andrew and Michael, the brains of the operation. Dowie, good to have you here as always in our sensory deprived room this morning. Not quite sure what's going on. You in trouble? Am I in trouble? Someone's in trouble. Anyway, share market. What's going on? Week 21, and what's going on?
Yeah, we're sort of really bouncing in this very predefined range at the moment, Andrew, aren't we? I don't think we've moved much more than a couple of hundred points, sort of, anywhere between that 5,600 to 5,800 it seems to be. We get to 56, bounces up, 58 comes back down. So no, it's been a very tight range. Really for a good 6-7 months or so.
Can you remember a time like this? Like 20 years, you've been going for nearly the same amount of time. Can you remember a time where it's been like this?
No.
And I guess probably the more pressing question for our loyal Dornbush download viewers, hi mum, is what's going to break it? You know, like what's the impetus? What's it going to be?
Yeah, look, I guess the thing that pops straight back into the mind, Andrew, is I guess the tensions between North Korea and the USA, albeit that seemingly has settled down a little bit now. Certainly this scenario in Spain, the Catalonia independence issue, could create a bit of a snowball effect, effectively. Yeah, so maybe that's a catalyst for a. And that's all bad news, of course, but certainly some of those high-profile, sort of issues, countries butting heads with either one another or other countries.
So that's the geopolitical stuff or macro stuff from an Australian point of view. Is there anything coming market-wise that could potentially break us out of that cycle?
Yeah, look, I think, Andrew, and I don't know if you'd agree, but, any correction is not going to come out of the Australian market. Our market's reasonably valued at the moment. There's no real fat in share prices currently based on earnings.
But they're not skinny either.
They're not skinny, absolutely. Yeah. We're certainly not cheap. Just reading, of course, news from last night in America, another record high. So if it's going to come out of anywhere, it's going to come out of America, you'd have to think at this stage. Having said that, company earnings have been pretty strong over there. They're getting still some good, albeit a little bit of mixed economic data, but all in all, American markets are rolling along pretty well.
But they've got low inflation, unemployment's at certainly decade low. I mean, it's about 96% full employment at the moment. And yet their housing market hasn't recovered. Like, it's a bit like here, we've got this patchy sort of, some things are going okay. Retail here, as we know, just sucks. It's a technical term for those playing at home. Let's talk about bank profit reporting season that's coming along. We've been sort of suggesting people buy ANZ, NAB and Westpac leading into that result, and certainly that's worked out pretty well so far. Excuse me as I'm quietly choking. We just had a look at, some back data, and that back data seems to support the strategy as well, doesn't it?
Yeah, it does, Andrew. Yeah, there's definitely a trend of a build into bank share prices, through October, and no real surprise, with that. Of course, as people buy into get the next round of dividends, the ex-dividend date, of course, being the key date, you need to be wary of, but. Bank of Queensland reporting tomorrow, so of course they'll go ex-dividend within the next week or so.
So it's Thursday, we're filming today on Wednesday.
Yeah, yes, and then of course, your remaining big three, NAB, ANZ, Westpac, reporting towards the end of this month and going ex-dividend not long after that.
So we see historically over the last 6 years that October is a great month for the banking index. Tends to fall away in November. No great surprise, people either banking profits or the shares going ex-dividend, but then surprisingly, that stuff we were just looking at before shows it kicking again in December. What do you think that is?
Yeah, look, December's historically the best month for the market, and that's across the board, whether it be the banking sector, but you look at the ASX 200 and the All Ordinaries Index, and I think it's give or take roughly 75% of Decembers over the last 15 years are positive months. I think there's a few things, Andrew, but probably ultimately trading volumes tend to be down a little bit. The amount of news is down a little bit. So volatility's down, and we tend to see in low levels of volatility in markets, they tend to be positive.
So if you're a seller, and I know there's a couple of clients that I've got that are sort of thinking about selling for whatever reason, I'm saying hold back till December for exactly that reason, that there's a better chance that you might get a better price, even early January sometimes.
Yeah.
But from about mid-January onwards, again, history shows that whether it's confession season, because profit reporting season's in February, or people coming back to work, or whatever the reason is, but the share market later part of January, the wobbles start to kick in again. So from a trading point of view, certainly buying banks leading into October, collecting that dividend, and then selling them sort of December, January, might be something to think about. But equally so, buying them now and holding them for the 3 dividends in 13, 14 months isn't exactly a bad idea either.
Oh, exactly right, Andrew. And again, looking at current pricing, all banks are still paying upward of, very highs to even 6% fully franked dividends. So again, comparing it to, current cash levels, it's well and truly, ahead of those. And of course, the banking sector is traditionally a defensive sector as well. So, I can't see any real reason why you wouldn't look pretty closely at topping up on some banks at this point in time.
Absolutely. Well, Doherty, I think we better go back to our solitary confinement cells. Till next week.
Thank you.